Hello, I'm Debbie Bell Hosking for FinextraTV here in our virtual studio, and I'm joined by Phil Cox, COO Russell Investments, and Roshan Shetty, BFSI Public Sector Head, America's Tech Mahindra. And we're talking about AI adoption in asset management. So welcome to you both.
Great to be here, Debbie.
Thanks for having me, Debbie, out here.
It's lovely to have you both in our virtual studio. And of course, we can't have a conversation about AI without starting on data, the foundation of data. And you often hear that there are these volumes and volumes of data that might lead to decision fatigue or that sense of overwhelm. So how important would you say AI is in helping asset managers deal with this overwhelm? If I may go to you first, Phil.
Yeah, it can be pretty overwhelming, as you suggest there. And I think, it's important for organizations to really start to understand, really how AI is going to impact the various areas of the business. And for asset management, obviously, that's right from the front end of how you look at investment decisions and you look at individual stocks or managers selection, right through to the corporate functions that support your activities. And so, I think putting together the best brains inside the company and just thinking through how AI can affect the various areas of your business as a starting point and looking at, what are those most significant use cases, because prioritization is going to be so very important.
And that prioritization and finding the value that it actually brings, what problem is it solving? Roshan, what would you add to that?
So I think just to build on what Phil mentioned, I see actually 4 areas where there is a lot of volume of information, a lot of volume of data, and AI can actually help the asset managers. One is in the analysis of the data itself. There's huge amount of actually information which is available, structured, unstructured information, and the ability to kind of analyze that and make a more meaningful sense of information is very important. The second is in the portfolio construction itself, where AI can use all the information that it has got available in terms of optimal asset allocations that can actually be done. The third is actually in the risk management perspective, where you actually see a lot of times you need to have real-time kind of analysis of the information of the risk, and asset managers will be really kind of pleased to see the support that they would get from AI and the algorithms related to AI. And the last bit is the trading strategies itself, So how can the AI engine, along with actually the volume of information which is available, help actually the strategy in terms of actually trading and actually making sure that the identifying the optimal entries, the exit points, and so on and so forth. So I see all these 4 areas which can be leveraged by the asset managers with the information that is available.
And you talk about these 4 areas. But if I can stay with you, Roshan, in your experience, what are you seeing in terms of how easily AI can be adopted, particularly in the day-to-day operations and workflows of asset managers and investors?
So Debbie, I think there are fundamentally, again, 3 areas that I would actually kind of call out. One is in the entire investment decisioning part, right? The asset managers can actually leverage AI significantly in making sure that their predictions, their actually analysis in terms of how they should actually kind of do the investments on behalf of actually kind of their clients, it could be really kind of improved manyfold. The second is actually the operational efficiencies. There's a lot of data that needs to be churned. There's a lot of possibilities of automating the information. There's a lot of regulatory reporting that needs to actually happen. And AI can be used in terms of helping all these operational kind of efficiencies being brought into the execution, which in turn leads to kind of better customer experience. And lastly, I think the third area would be actually evolving new opportunities. having personalized kind of investment plans being kind of created based on the information that is available and AI engines being used for that. It could be actually kind of trying to look at how you manage your funds, whether you want to kind of make it more aggressive based on actually the behavioral pattern also of the individuals. So I think these three areas would be actually areas where the asset managers can actually use it very significantly to make an impact in their business.
And before I move on to Phil, in terms of that question you've just answered, does it save time as well? Does it help with time management as part of that overwhelm we discussed in question 1?
Yes, it does. It does. Absolutely, it does. And I'm pretty sure Phil can actually kind of also add in from the practical perspective,
Yeah. Phil, what would you add to that?
Yeah, I think there's been fast adoption of what I would call information-based tools. So if you think back a few weeks to the trade announcements, and within an hour, there are literally hundreds of economic notes coming out with various points of view about the impact. And we were able to run, summary reports of what did these 300 economists actually say in aggregate? What's the general view about impact on trade flows and exchange rates and interest rates and other economic data? And so I think the information side of things is one aspect. I think where we are really trying to work on the engine of the car, if you like, is down at the process level. And so do we continue in financial services? Of course, it's all about understanding your processes and understanding the risks in those processes and the control environment that you have. And the traditional kind of 1.0 version way of continuing to improve your control environment is to get down into the technology, into the systems, looking at the processes, the efficacy of your controls and so on. Whereas with AI, you could in theory kind of have this overlay of technology that kind of says, hey, this is going on in one of your platforms. It doesn't look right, or it doesn't look consistent with previous activity and so on. It could be an error. It could be a mismatch or some outlying thing. It's worth checking. And so I think organizations will have to decide about whether they continue to focus on the 1.0 version of that, or with AI, look at more advanced techniques in scanning what's happening inside the company.
And we're talking about the techniques that come along with the adoption, but AI is constantly changing. And Phil, if I can stay with you for this question, please. Technology adoption, does it have to be a case of constantly changing along with the technology, or can organizations be a bit more selective, and particularly as they look to the future?
Yeah, I think we're obviously straddling the paranoia that everybody else is doing lots of things and you're behind the ball and you have to up your game, with the fear of jumping ahead of the game and almost kind of spending money and putting efforts into things that next month or next quarter are going to be far easier, or there are going to be new tools that are going to be rolled out that you could use. So I think there is hesitation, but prioritization has to be the key thing at the end of the day, and understanding the potential ROI of both the time-based efforts and also any material spend that you're considering. And as I say, getting the right people inside the company, across the organization together to think these things through, because obviously ROI comes from increased sales or extra margin or client satisfaction or retention. It can be measured in many different ways, but you have to have consensus across the organization to how the ROI of these investments are going to be achieved.
Mm-hmm. Thank you so much. You're talking there about prioritization and consensus across the entire organization. Roshan, what would you add to that in terms of making better selection choices?
So I think, Debbie, first of all, technology has kept on changing. And I think it is going to keep on changing. It's never going to be standstill. I think what we need to kind of make sure is that any emerging technologies that keep on coming, and AI is actually the current one, it stays actually front and center in terms of the strategy of what you want to kind of do into your systems and your processes. As Phil was mentioning, the process part is actually very important in an asset management business. So we need to make sure that we adopt these technologies inside the mainstream execution. And when I say mainstream, it's actually the core execution, because unless you touch the core, you won't actually kind of get the ROIs as much as you want in terms of the investments that you do. And secondly, you need to actually kind of take steps where it's a no regret kind of step, So you do those changes, you do incremental changes such that if there's another change in technology that actually happens, you don't actually kind of have to go back and make good of the choices that you've made. You can just build on top of that. And you have an architecture, you have the resilience in your system that it keeps on actually adopting new technologies and moving fast from a time to market standpoint, So that would be my take on that.
And I think what I'm hearing about there is you have the technology that allows you to be agile as things change.
Absolutely. Well said.
No, lovely. Well, lovely to speak to you both. Thank you, Roshan, and thank you, Phil. It's been great, particularly to talk within asset management, that AI adoption strategy. Thank you very much.
Thank you very much.